afternoon, traders all around the world. This is FXPassion broadcasting you live on YouTube. Hello Akos, hello Miguel, hello everyone, how are you? And this is Forex Trading Course 101, everybody. Remember, we're trying to build the three pillars. Pillar number one, the strategy and or the system. Pillar number two, we want to understand how risk management works, what is risk. And the third one is the big one, big circle, the psychology part. And if this is your first time, everybody, we are in the intermediate module. Remember, we are passed over the basic and the beginner module. So if you don't quite understand what is happening, maybe the webinar is challenging, go back on the Ducascope YouTube webinar page and start watching the Forex Trading Course 101 from lesson number 1. And remember, 90% of traders lose money in the Forex market worldwide, and the webinars are not investment or trading advice. The webinars are for educational purposes only. For homeworks and or questions, hello Silas, you have my Gmail contact, my Skype contact and my LinkedIn contact. No audio. Can you hear me, Miguel? I have the audio. Everybody, can you hear me? And remember, I have a 20 seconds delay on the chat. Silas, can you say to Miguel if you can hear, or Akos, can you say to Miguel if you can you hear? I hear you. Okay, so let's continue. Today's lessons, rules for trading the three Fibonacci's, part 1. Okay, so we have here 4 different pictures, everybody, and those are the rules that you need to learn. Okay, starting from the original Fibonacci, this is the picture number 1. We use the original Fibonacci to determine trend direction, and then we compare trend direction from the larger time frame to the lower time frame. And the last thing, we need to identify the zones, right? And for high probability trades, you should always enter in extensions and in the same direction. Okay, things to remember: the higher time frame controls the smaller time frame, the Fibonacci is stronger than the trend line, and you want to buy or sell the C and take profit at D. So this is the original Fibonacci and the rules. Now, second one is the contrarian Fibonacci. We use to contrarian Fibonacci to trade retracements, which is risky, and to find the C of the original Fibonacci. Trading rules: until the D extension of the contrarian Fibonacci is still inside the AB boundary of the original Fibonacci, you are entering trades with a probability 50-50. Hello Annie. Number 2, if you can find a contrarian Fibonacci with the projected D extension above or below the A of the original Fibonacci, you are entering 80-85% trade. When you find the C, your stop loss should go 10 to 100 pips above or below the A of the original Fibonacci, and you take profit should go 10 to 100 pips below above the D of the original Fibonacci. When you find the C, you should check the trend direction from the larger time frame and compare it to the lower time frame prior to entering the trade. And the last thing you need to do is to identify in what zone are the Fibonacci's on the larger time frame and on the smaller time frame. So this is the contrarian and the Fibonacci of the confirmation. Trading rules: until the D extension of the contrarian Fibonacci is still inside, this is the same. Number 2 is the same, number 3 is the same, number 4 is the same, number 5 is the same. Number 6 is new. When you arrive at the point where the D of your Fibonacci of the confirmation is above or below the D of the Fibonacci, original Fibonacci, you should take profit at the D of the original Fibonacci. Now, what does this mean, everybody? Trading rules. If if let's open, let's try to open NZD-CAD, right? Let's open NZD-CAD and let's open a real Fibonacci. Remember, when we are telling you that the higher time frame controls market direction, okay, now let's open NZD-CAD daily chart, and we're going to delete a few things. Delete, 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 and we're going to zoom out. What can you see from this picture, everybody? What can you see? Look at the original Fibonacci on the daily chart and look where the weekly D extension is, and look where the monthly D extension is, and look where the daily D extension is. Hello boss, how are you? What do you think? Where should you profit take? This is where we are telling you that the higher time frame controls the smaller time frame, and many times you are going to have the original Fibonacci after the, you're going to have the D extension of the confirmation Fibonacci after the original Fibonacci. Where should you profit take? Should you profit take at the weekly D extension? Should you profit take at the monthly D extension? Or should you profit take down here at the daily D extension? What do you think? If you don't know, everybody, these rules, then you are going to trade on the daily not knowing where is the weekly D extension and the monthly. And guess what the market is going to do when it's going to hit the weekly or the monthly? You are going to lose, and you are going to think, well, this Fibonacci BS, it doesn't work, Add the D of the original of the daily, says Miguel. Anybody else? Where should you profit take? Everybody, what happens when the market hits the D? Who knows? It doesn't matter up Fibonacci, right? Or down Fibonacci. What happens when the market hits the D extension? Always, 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 always. It's happened all the time. What happens when the market hit the extension, everybody? It doesn't matter daily, 2 hour, 1 hour, monthly, weekly. Teacher MHB, Teacher Annie, Teacher Silas, Teacher Akos, what do you think? What is going to happen? Start a new swing, yes, Miguel. What else is going to happen? Retracement, this was the word I was looking for. The market, when it's going to hit the appropriate D extension, is going to retrace. Okay? It's going to retrace. Thank you, Akos, congratulations to you. So, when Miguel is saying, well, we should profit take at the D extension on the daily, but the market is going to hit the weekly D extension, what do you think is going to happen? Start a new fib, yes, but what is going to happen with the market wave? And the market wave goes with extension, retracement, extension. everybody? Guess what is going to happen when the market is going to hit the weekly or the monthly? Especially the monthly. Yes, correct, it's going to retrace, but it's going to be a small retracement or it's going to be a big retracement? What do you think? If the higher time frame controls the smaller time frame, and Miguel says, well, let's profit take at the D down here, goes in the opposite direction, yes. So for the one who are going to short again, the NZD CAD on the daily chart, 1 hour chart, 2 hour chart, you know, whatever, right? For some traders that are going to short, should you profit take at the weekly D extension, or should you profit at the monthly D extension, or should you profit at the daily D extension? Now that you know that the market is going to retrace. And this goes with the rule, don't let a winning trade, don't let a winner become a loser. You know? And it says on the month is going to be a big retracement. Yes, ma'am. Congratulations, Annie. You can expect, everybody, when the monthly is going to hit, and is going to hit before the daily, you can expect a big, deep retracement. And Ako says we should profit take at the weekly. Yes, sir. You can profit take at the weekly, or you can monitor if it's going to push lower because they are near one and the other. Maybe it's going to push lower, but don't expect to hit the daily D extension, everybody. Yes, monthly is still okay, but the first reaction is going to be at the weekly. The first reaction is going to be when the monthly, when the market hits the weekly D extension. So when I ask you, everybody, should you take your profits at the weekly or monthly on daily, the answer is number one, at the weekly. Not the daily, but the weekly. Because when the market is going to hit the D, game over, the market is going to retrace. You can expect a deep retracement. And if for any reason it's going to push lower and hit the monthly, expect an even deeper retracement. Why is that? Because it's the monthly chart. Monthly chart in here. Too much stuff, right? I'm going to delete this, delete, 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 delete. See, everybody? Delete. This is the monthly chart. Guess what the market is going to do when it's going to hit the monthly, the extension, which is here. Can you see past support, everybody? Now again, you can do anything you want, right? You can go and wait, because the long term, no, it's not that Miguel is wrong. Miguel is not wrong. The long term direction is still down. Miguel is not wrong. The long term direction is still down. But between the monthly, the weekly and the daily, before the market gets to the D extension, is going to reverse again. So where's the difference? The difference is in time. Because we don't have the crystal ball, right? But we know how the market works and how the market behaves, right? When the market is going to hit the weekly or maybe the monthly, 90 to 95% is going to push back up until this long-term downtrend line. So if Miguel stays in the trade and is going to wait, he's not wrong. It's just going to take him, I don't know, 6 months, 7 months, 8 months, a year and a half for the trade to reach the D extension. Questions, everybody? if you are going to use the Fibonacci's for your trading, okay, if you are going to use the Fibonacci's for your trading, and you have a Fibonacci of the confirmation on the daily like this, okay, where should you profit take? Should you profit take at the, and this is so important, everybody, this is the A. Listen to me very carefully if you are going to use the Fibonacci's. This is the A down here, this is the B up in here, this is the C down here, right? Green goes to green, and you have a D extension up in here, right? And you lost the opportunity to enter at C, so we are trading now, or we don't have enough capital, it doesn't matter, but we are trading our Fibonacci of the confirmation, which equals to the original Fibonacci on the 1 hour chart, 2 hour chart, maybe 4 hour chart, and we are here right now. So this is so important, where, and let's say that we are going to enter in here, right, counter trendline break, where should you take your profits? Should you take your profits at the level of the original Fibonacci D extension, or should you take your profits at the D extension of the Fibonacci of the confirmation? What do you think if the higher time frame controls the smaller time frame? What do you think? And where traders, Fibonacci traders, lose money, you could have something like this, you know. So D, yes, but what D, Akos? D of the original Fibonacci or D of the sub D of the Fibonacci of the confirmation? Where should you profit take? Right? And you have, of course, you have your uptrend line is in place, and you have your MACD and Stohastic and Bollinger Bands and everything, and you entered in the perfect trade, right? Where should you take the profits? The original D of the original, yes sir, great. So if this is the profit, right, if this is the profit, and if this is the risk, should you enter this trade? Everybody, should we, right? I'm your student, you're my teacher. Should we enter this trade, everybody? This was the entry, right? Should we enter this trade? Because we are going to profit take at the D, not green goes to green anymore because of the Fibonacci of the confirmation, which equals to the original Fibonacci on this smaller time frame, but we are going to profit take up in here. Now, risk reward, should we enter or should we stay out? And everything is telling you go up, enter the trade. You have the Stohastic, the RSI, the MACD, the Super JP Morgan Chase, you know. Your other mentors, your cat and your dog are shouting, enter long, let's buy. Akos says no, why not? Why not, teacher Akos? Why shouldn't we enter? Stay out. Why is that? I know that the market is going to go up, right? Oh, I know the market is going to go up. So many students these days talk, oh, I know the market is going to go up. Oh, I know USD CHF is going to fall, right? Oh, I know EuroCAD is going to fall again, right? Oh, I know. 1 for 1, yes sir. Congratulations. Is this you, everybody? You are talking to some other trader? Oh, I know what the market is going to do. Correct. Nobody knows anything about this market, everybody. If you find a teacher or a trader, okay, you find a professional trader who wrote a book and he's telling you, oh, I know. Find another trader. Do a favor to yourself. Nobody knows where this market is going. Not the investment banks, not the big hedge funds, not the big world banks. Okay? And if somebody is so arrogant to tell you, no, I know, invite him to the class here. Let's talk to FXPassion. Okay? We can debate. Oh, I know. Well, how do you know? I'm not sure it's going up. So back to the rules for trading the 3 Fibonacci's part 1. This is an extremely important rule. If you are going to use the Fibonacci's on your trading, you should have the higher time frame Fibonacci's on your lower charts. You should have the weekly D extension and the monthly D extension on your daily chart. It's a must, everybody. It's a must. It's non-negotiable. Because if you don't have it, guess what it's going to do? You are going to enter here with another counter trendline break, right? And then you are going to ride the trend for 2 swings on the daily, and then the market is going to reverse. And maybe you were sleeping or whatever, and your winner just turned out to be a loser. And you are going to think, oh, this Fibonacci BS doesn't work, you know. FXPassion doesn't work, you know. Where in fact you missed, you didn't know that were the extensions from the higher time frame on your lower time frame chart. Okay, everybody, questions? Is this clear? Don't come crying next month, oh, Fibonacci's, I don't understand, I don't. This is a rule how to trade the 3 of them. Questions? Remember, I have a 20 seconds delay on the chart. So this is a rule, right? And let me see, I don't have the Fibonacci of the confirmation, but we can draw it quickly, no problem. So we can check. Let's say that I'm trading the 1 hour or 2 hour original Fibonacci. Let's see. We can do it quickly. This is the first swing, the second swing. This is going to be green goes to green. This is going to be the third swing, if I'm not making any mistakes. Okay, so this is still okay. The market needs to fall down here. But when the market hits this D extension, I'm going to project. My new projection is going to be like this. Right? So my projected D extension from my Fibonacci of the confirmation is in between the monthly and the weekly. So where should I profit take? Should I profit take at the weekly, which is here, or should I be greedy and stubborn, you know, and oh, I want more money, you know, I want that much money? Is there anything wrong to take the profits at the confirmation? What confirmation, Miguel? What confirmation, Miguel? What confirmation? The D confirmation, the weekly D extension, the monthly D extension? What confirmation? At the original D from the So I'm going to delete this, it's a speculation. Fibonacci, yes, but what Fibonacci confirmation? Is there anything wrong to take the profits at the confirmation or the Fibonacci confirmation? What Fibonacci confirmation? Are you talking about the weekly D extension? Are you talking about the monthly D extension? Or are you talking about the, which is here, where is it? Or are you talking about the daily D extension? Like this, and like this. There you go. So we have the three extension. This is the monthly, the weekly, and the daily. The extension is going to be here. Daily, the extension. Which one? D of the confirmation Fibonacci. Miguel, again, it depends. Everybody, this is for everybody. Miguel is asking, but it's the same question for everybody. You can take profits at the D extension of the Fibonacci of the confirmation unless this Fibonacci is, the D extension is after the weekly D extension or the monthly D extension or the daily D extension. So you should profit take where is the greatest force, right? Now, and this opens a series of other questions and scenarios, right? You have, everybody, you have original Fibonacci. You have a original Fibonacci daily in here. Okay, this is the daily ABCD. But you have a Fibonacci of the confirmation before on the, so this is the daily chart, right? This is the daily chart on the left. You have the daily chart on the left, and how is that? Let's say like this, like this, like this, like this. Okay, so on the left you have a daily Fibonacci, on the right you have a weekly Fibonacci of the confirmation. Weekly conf Fibo. Okay, where should you profit take? Should you profit take at 0.74922 or should you profit take at 0.75218? What do you think? What does this mean? The higher time frame controls the smaller time frame. For the cases when the risk reward is not the best. When the risk reward is not the best, you shouldn't enter the trade, Miguel. But this is the rule, everybody. You should profit take where and when is the greatest force. Passion, but why? Because the higher time frame controls the smaller time frame. Correct, Akos. The weekly sub has greater chance, has greater force. Okay? And one more thing, everybody. You don't have anything to lose. If the market, what do you have to lose if you take profits on the weekly D extension in here? The market is going to push lower, hit the weekly D extension, start to retrace. What do you have to lose? If it's going to push lower to hit the monthly, you just re-enter again. But what if, right? Because grown up traders, they don't tell you, oh, I know. What if the market is going to push higher? If you profit take at the weekly, you are following the rule, don't let a winning trade turn into a loser. And it says 0.74922. Yes, correct, Annie? Correct. Okay, everybody, are we clear on profit taking? Are we clear where to profit take and how and the why? You should profit take where your monthly chart hits the D, where your weekly chart hits the D, where your monthly chart hits the sub D before you can profit take the daily. And the 1 hour and the 2 hour and the 4 hour chart. Okay, next, let's see what's next. So, how to use the 3 Fibonacci, things to ponder. All the rules apply to all Fibonaccis and on all time frames. We talked about the stop loss already. Every Fibonacci can have the contrarian Fibonacci and the Fibonacci of the confirmation. But what about risk to reward? What do you think now of? What about risk to reward? It's 1 to 1 enough? It's enough for you 1 to 1 now of, or it's not enough? Why I'm showing you this, everybody? Many times you are going to enter on your 1 hour, 2 hour, 4 hour time frame. You're going to enter the trade, and your trade is going to be profitable for 1 hour, 2 hours, 6 hours, and then is going to turn into a loser. Why is that? Because the higher time frame controls the smaller time frame. And when you say what about risk reward, what is the rule? Thank you. Now if you are courageous enough to ask questions, but there are a lot of people asking this question. They just stay quiet, you know, they watch the webinars, which is okay, no problem. You should obey the rules, everybody. If I go out, it is less than 2 to 1. So what should you do? Should you profit take or not? Should you enter the trade or not? 1 to 1 is for the scalpers, for the position traders, the swing traders, the day traders, the news traders. 1 for 1, it's a better risk reward ratio. 2 for 1, it's okay. 3 for 1 is better, you know. But in the end, everybody, it's up to you. It's up to you. Are you going to enter? Aren't you going to enter? You know, how many lots? What's the risk? We are broken your balls telling you enter with 0.5%, 1%, and you just don't listen, right? And you enter with 5% because you are greedy. And then you win and you are happy. On the next you are going to enter 5% and you are going to lose. And again you are going to enter another with 5% and you are going to lose again. And now you are down 5%. And because you are greedy, you are going to enter now with 7% and you are going to lose again. And you are now down 15%. And because you don't understand the risk, instead of trading smaller lots, you are angry and frustrated, right? And entering with bigger lots just to burn your account. Is this you, everybody? Is this you? I mean, this was me a few years ago, of course. Happens to everybody. Hello boss, thought the clock went back. Man, I don't understand anything anymore about the clocks, because I talked to one friend in Turkey and he said that Europe doesn't have the change of the time zone anymore. So no daylight change, or I don't know what's the name. When Europe changes the time, you know, 1 hour before, 1 hour after, Russia changes time. I don't understand anymore anything. You know, Europe doesn't change anymore. Asia, yes. Brazil, no. Canada, yes. It's a mess, you know. Don't worry, time to shine. And our boss is in the office. Yanis is in the office today, if you want to talk to him. Okay, it's a mess with these time zones, and some countries have the summertime, you know, some country doesn't have. We do have the time change in Europe, Miguel, but if you go online, you are going to see articles that Europe has ended the change. So I don't know what to believe, you know. Okay, no, we changed in Europe. It is 4:35 right now. Okay, great. Back to trading, everybody. You know, you need to obey the rules. So let's go back to the picture. So we are clear on profit taking, right? We clarify to you where to profit take. Okay, time to shine. Take care, stay safe. Okay. Now, we cleared about where to profit take and why. We cleared about in the past webinars what about the stop loss. Where is the best place? If you have enough capital and if you allow yourself not to risk too much, is above or below the A, otherwise is the C. But if you enter inside the AB boundary, you have an 80% chance of being stopped out. For sure we have changed. Thank you, Miguel. Let's see what does the picture says. Number 3. When comparing larger time frames and smaller time frames, it's possible that the contrarian Fibonacci on the larger time frame is the original and or the Fibonacci of the confirmation on the smaller time frame. And is asking, you say a left winning trade never become a lose making trade. This sounds simple, but it's not. What is the best way to manage that? There is no best way any, because there are no rules how you are going to manage the trade. But this is an example. Take profit at higher time frames, the extension. You know, there are no rules to how to manage the trade. One great technique to manage the trade, but it's a technique, and it is when you enter a trade, and we learned this in the previous webinars. When you enter into a trade and let's say that your trade is going in the right direction, like this, this is going to be your stop loss, the red one, right? So this is the stop loss up in here, and this is going to be your entry. Entry is in here. One of the techniques, any, is that, oh, let's say entry and one more. So this is going to be the market. This is going to be the market. Entry green, stop loss red, market is going to be blue. Clone and color blue. There you go. So we entered here any. We have our stop loss up in here, and when the market is here, you can adjust, you can cancel and replace your stop loss goes in here. And if the market pushes lower again for any reason, this is the market, you can cancel and replace your stop loss again. Okay, this is a way, this is a technique that it's not going to happen. You are going to end in profit if the market goes in your direction. Even if stops you out, you are going to end out in profit with cancel and replace technique. Okay, this is just one or you can go with the trend lines. It doesn't matter. There are thousands of techniques how to manage the trade. What is important is just when you enter, you know, you enter the market. I'm going to delete this one. Delete. This is the market. You enter and then you go to sleep, you know, or you go to work or walk with the dog, and the market, instead of going down, is going to push up. Yes, it depends. If the market goes against you as soon as you enter, then you have nothing to do. But if the market goes down for an hour, 2 hours, 3 hours, right? If the market goes down, you can at least, when you have what, 70 pips, 100 pips, you can move your stop loss to break even, and then you are safe. Oh, Passion, what if the market stops you out at break even? You re-enter. What you do? You need to re-enter with the next counter trendline break. Everybody, we explained this in the 3rd month. You have 5 hours of this technique. Go back on the Stohastic webinar YouTube channel and find these videos. Are there. How to trade market structure, how to trade the market wave. It's all there. Okay, Annie? But in the end there are no rules. There are countless techniques how to manage the trade. Cancel and replace is one. Trend lines is the other one. And then you go whatever, you know. Number 4. In other words, the retracement of the one could be the extension of the other. Okay, so let's try to understand this. Let's try to understand this. Between an extension and a retracement, who has the greatest force? Everybody, between an extension and the retracement, who has the greatest force? Yes, Annie, please do this. I know it's time consuming, it's difficult, you know, but it's a way to go. Between an extension and a retracement, everybody, who has the greatest force? You have a daily chart. You have a daily chart and it's in a retracement mode still, right? You have a daily chart, it's in a it's in a retracement mode, and then you have a 2-hour chart which is in an extension mode. You know, it retraced and now it's pushing lower. So what should you trade? Should you trade an extension on the daily, or should you trade a retracement? I mean, should you trade an extension on the 2-hour chart, or should you trade a retracement? You know, extension. All of you are right. Do you know why? Do you know why? You are right. So why the extension has the greatest force? Because if I'm your student, I'm going to question teachers, but you said that the higher time frame controls the smaller time frame, and the original is up. Everybody, the original is up. Why should I trade the 2-hour extension if the original Fibonacci is up? You're right. Why is the extension the right answer? Right? because it's going in the direction of the trend. Not true. On the daily chart, teacher Akos, we are in an uptrend. Not true. Time to shine, the extension is longer than the retracement, so there is more force on a longer move. But the longer move is up. Look at the daily. So you are correct, but you don't know why, right? Why should, if the market is positioned in this way, why should I trade the down extension on the 1 hour chart instead of waiting for the buy trade on the daily? Who knows why? You need to understand the greatest force and the trading rules with the Fibonacci's, right? And the next, no, I'm not going to give you a straight answer. No, I want you to think what happens if the contrarian Fibonacci on the daily chart has found its C. Should I trade the extension on the 1-2 hour chart, right? Or should I trade, so it found a C, or should I trade the Fibonacci of the retracement on the 1-2 hour chart? What should I do? Should I trade an extension or should I trade a retracement? Everybody. Those are the rules how to trade the Fibonacci's. You need to understand. If not, you are going to lose, everybody. If you don't understand the contrarian and the Fibonacci, the confirmation, just go with the daily chart and the original Fibonacci, no problem. Just trade the original one with the confirmed Cs if you want. Okay, so answer, why extension? Because in the first example we didn't have a confirmed C and the greatest force was in extension of the 1-2 hour chart. But this is going to change completely when the market finds its confirmed C on the trading time frame. Then the answer is not going to be where is the greatest force in extension on the retracement, but it's going to be the retracement on the 2 hour chart, which is going to equal the extension of the daily. You can trade the retracement if the lower time frame. Yes. Okay. And the most important question is if I don't have a clear read, I don't know if my English is correct, if I don't have a clear read of the market, what should I do? This is even better question. You know, if I don't have a clear read, if I don't understand, I mean, the market is up, but it broke the uptrend line and it found the confirmed C, but it's on the other side of the uptrend line and I have a lower high, you know, what should I do? Should I go long? Should I go short? And he says when the C is found on the daily, you can go in the market on the 2 hour retracement. Yes. Okay, what about I don't have a clear read? I mean, I know that the concepts are this, but the market just broke this uptrend line and I'm above the uptrend line and I have a lower low, right? Lower low, this is a low, I mean a lower high. This is a high, this is another high, I have a lower high. What should I do? Should I go long or should I short, you know? What should I do? Especially when the question is, why should I do on the 1 hour chart when the weekly chart, I'm going to give you an example, everybody. Let me take 5 minutes, stay out. Everybody, let's open AUDUSD. AUDUSD. Stay out, yes, it's a nice one. If you don't have a clear read, stay out. You can adjust the trend line. No, you cannot adjust the trend line as you want. No, sir. This would be an error. Okay. AUDUSD weekly chart. AUDUSD weekly chart. Let's remove. Okay. What now? What now, everybody? This is the weekly chart. The market just broke the long down trend line from 2018, right? Should you short or should you go long? And no, you cannot adjust the trend line. No, you cannot. Okay, and I'm going to draw the Fibonacci of the confirmation, which I don't have. Let me see, this is going to be A to B and retracement. This is going to be the second one, you know, Fibonacci retracement, green goes to green, the third one. Okay, we are here. So what should we do, everybody? And guess what? You have a down Fibonacci, right? We have a down Fibonacci also on the 4-hour chart, if I'm not mistaken. Let me see. Up and or down, down. No, I don't have it. But on the daily, right? Oh, I have an up Fibonacci on the daily. Let me see. Platform froze. Come on. Okay, there you go. So, what should we do? Where is the greatest force? Should we go long or should we go short? Right? Everybody. And when you say long or short, the next question is why? What are the rules? Yes, okay, but what's the direction? On the 1-2 hour time frame, 4 hour time frame, should I go long or should I go short? Okay, everybody, this is your homework until tomorrow, okay? Analyze AUDUSD on the monthly, weekly, daily, and 1 hour, 2 hour, 4 hour time frame, and come tomorrow with an answer. A complete answer. Passion, I want to go short because of this, this and that, or passion, I want to go long because of this, this and that, and the greatest force is long because of this, this and that. The daily is up. No sir, daily is down. It's a down Fibonacci. It's a down Fibonacci with the down confirmation Fibonacci. The market just broke the inner trend line, inner down trend line. And it says if you don't have a clear read, stay out. It's a nice answer, right? Don't force the trades if you don't understand where the market is going and why. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.